Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn and Associates with your financial market update. And this is for Thursday, the 15th of June, about 4 p.m. Central Daylight Time. The markets have just settled up. So the stock market down, but nowhere near as bad as the market started itself off. You're 100 points off the low in the Dow. Let's congratulate it. And by the way, this is the last day we're going to cover on the June stock indices. We're moving right now to the SEPs on everything. The NASDAQ well off the lows, 70 points roughly off those lows, and about 14 points in the S&P. So not bad action at all on those markets. Now when we look at the June Dow Jones, remember this is where I'm finishing everything up for the Junes. You're finishing up on a good note. The market's still, if you look at the weekly chart, you're still up 112 points. Who said the Fed action hurt that market? I don't think it's hurt the market at all. When we take a look at a daily area chart of closes, right on up. And again, you close today at 2163. The highest close we've had is 21,371. Still bullish action. When we look at a daily bar chart, you tried to break, you couldn't stay down. We're still in that up thrust that the market has. And when we go to the swing line study, which are these brown lines, I'm looking to see if it's trending. A trend is, as I define it, if it's up, it's got higher lows and higher highs. If it's down, it will have the opposite. It will have a pattern such as this, lower highs and lower lows. And if it has no trend, it's got the mixture, a higher high and a lower low in some formation. So this market, until you take out 21,127 on the current formation, is still very much alive in bullishness. It's over the 18-day moving average of closes, which is also over the longer-term 100-day, both in bull category. Then we come to the Bollinger Bands. Well, if you rally from here, that band's right in front of you, 21,416. That'll be the next upside target. In fact, it is the next upside target should the market be able to mount a rally from here. When we look at momentum, and this is to me the key, take off the name of the chart, take off the sidebars. When you get an embedded reading, you're looking to be a buyer until that reading is lost, which means the red line gets under 80. Anybody that tells me different, I do this, I don't want to hear. I put my fingers right there because it doesn't matter. The NASDAQ fell to the lower Bollinger Band. And what's the importance of Bollinger Bands? A Bollinger Band is an algorithm developed to keep the market trading within it 95% of the time, not 100% of the time. If it's 100%, it'll never hit it. You want it to hit it because think of the market as having theoretical, I guess, mathematical resistance here and support here. And if you go back and you look at the charts, you'll find that it works pretty cool. There's also a way where it's called riding the band. And that occurs when the market keeps hitting an upper or lower band, ideally accompanied when the slow stochastics convert themselves into a locked-in or embedded trend. And right now you have an embedded stochastic that is still bearish, pointing down, not in oversold territory. The market's in a bear phase, lower highs, lower lows, but it got its legs under it today at 56.52. The lower Bollinger Band, and there was probably a certain amount of size of relief when that occurred. As we come to the E-mini S&P, what's the line in the sand that I so often talk about? It's this 18-day average of closes in red. It's got it. Now, there's a negative on the chart. Now, let me show you what it is. We've been having recently a pattern where the market comes down, loses its embedded reading, and as I so often say, the only time it can get it back is the very next day, and it's been getting it back. From there, it's a sign innately that something's wrong in the market when it starts losing it and loses it again in swift order. I think that's a warning sign. So I'd be very careful about this market. It's still not under the 18-day average, but I think internally it's weakened quite a bit in terms of the technical picture. The Russell's been in a down phase. It is an overbought market looking to come down, and I would not be surprised if it wants to reach into this 1396.70 level, the 18-day average of closes. It is not a trending market because being over the 18-day average gives you an upside bias. The swing line is down. That's what I'll call the short-term trend, and momentum's overbought. They're all over the board. Nothing's in sync, so I don't see much there. As you also know, I have pointed out to you that I thought the VIX, as it started narrowing in like this, was going to find itself running into a brick wall. Go back and just look what I've recently said. You hit it today and you ran into the brick wall combination of the 100-day average and the upper Bollinger Band. This has been a son of a gun market to try to get a handle on for any period of time. You had that one monster move back here. You gave that up in 48 hours, went flat against this 18-day average, and I'm going to say that's still what you're doing. So this isn't giving you really an eye for what the market is all about. In the bonds, so the Fed's going to raise interest rates again. Are you impressed? You're down 5/30 seconds. I don't know what everybody got all bent out of shape about yesterday in some of these markets, because the cash markets are saying, no, you know, the Fed, yeah, we can get corrections, but the market keeps looking at the economic data coming out and doesn't see the justification, and you're seeing that in the pricing of futures and if you're looking at the cash markets. Is there a trend here? There is not. You have a lower low and a higher high. You're more or less caught in the upper Bollinger Band in the 18-day average in an overbought condition. Don't know what to do with that. When I come to the 10-year note, you were down 9/30 seconds. So what are you at? I didn't look at today's rate. 213, something like that on it. And you've got the lower low, the higher high, and you're still fighting your battle here at that 18-day average, and momentum's trying to point down. So discombobulated, is that a good word? We might use that for what the Treasuries are doing. In the dollar index, you have done a flip-flop. You went yesterday down to the lower Bollinger Band, bang, short covering hit. You went up today to the upper Bollinger Band. It's rare you do that. Let me step back. Tell me when you see that on the chart. And that's a market that's searching for direction. It's getting caught in this tight band, trying to figure out, do I go with the Fed? Does it mean the Fed's going to raise rates again sometime this year? They're going to do the balance sheet. They're going to start taking off out of that balance sheet, 30 to 60 billion a month. When is that going to begin? Or does the market look at the economic data that's still pure and simple, doesn't justify all the forward thinking of those rates just yet? Will it change? Well, Ms. Yellen of the Fed seems to think it will. But the data that came out today, you can look up and down it, didn't look that great. Industrial production, other numbers. I do think the New York Fed data looked pretty strong, so that justified maybe the rally. But you're still caught in a trading band here, and I want to see what that does. And it's the flip-flop of that in the euro currency going from the upper to the lower band. Now, there's bias to the downside here. There's bias to the upside in the dollar index, but neither of them are trending at this point. Then we get to the British pound. And in the pound, Brexit talks are due to start on the 21st. So it appears, and that's all I can say is the word appearance, that Miss May's got her upper chin. Maybe she's got the Irish in her pocket now for those 10 votes that she needs. And Brexit will start talks. Now, will they get a lot done? Who the heck knows? But at least the talks are beginning. And Brussels has been very clear. They're not putting off the time, and the clock is ticking down. So we'll see what this all means. Right now, you have the swing line up. The market's under the 18-day average. Again, take off the name of the chart. It's not a trend. And you've got a market that's just getting out and has come out of an oversold condition. Japanese yen, take a look at yesterday's action. Outside day up. If you take that out, I think you go to the 18-day average. And as I said then, you might even make a run to the 100. This is not a chart that I think you can trade. But, again, every time you've hit this upper Bollinger Band, this market has failed on the upside. It doesn't mean you go short there. It means that's where I think the pros are taking money off the table. Crude oil, still very much in a bear camp. Embedded reading, you know the importance of that. Means that I think that the rallies until this red line's back over 20, they just keep getting sold. And yes, there's probably a psychology at work in some of this where traders are going to say, okay, we're into Friday. On Tuesday, we're going to get API numbers. Maybe they'll finally start to show that we're going to get draws on gasoline, distillates, and the stocks of crude oil all together. So you got to be a bit careful as you get down into these numbers because that thinking comes creeping back up and then it gives ground. Just count your days and go back. You can see what I'm saying if you look at how the markets are reacting going into that. Gasoline, riding the lower Bollinger Band with an embedded reading. It doesn't get more bearish than that until you lose that embedded reading. In the nat gas, the market's had a heck of a bounce, and when it reopens, it might justify that you already lost the embedded reading. It might say that if it gets up a little more, you can't even get it back tomorrow. So I think there's short covering in here, and I will not be surprised because of loss of that momentum to see the market make an immediate challenge of the 18-day average of closes and see if it can build on that one way or the other. Obviously, I don't know what the weather forecasts are. I'm not a weatherman, but that's always a warning sign. Do remember, if the weather forecasts call for cooler, you can re-embed only tomorrow. So tomorrow's going to be an important day, but the way it closed on the highs, the numbers are going to drive up the slow stochastic reading. I can tell you that already. So as I told you, I wrote my gold report. And for those of you that like to not look at the day-to-day action, but maybe the long-term action, I wrote it off the monthly charts. Now, that's very difficult to trade off the monthly charts. Some people can take advantage of them. I know we were talking in the office. One of the gold calls that we were looking at was $300 for one that's about $30 higher, $40 strike higher today. It was interesting because all the premium came out on the break, obviously, for the calls. But I took the chart and I give you two breakout points, one to the upside, one to the downside. I take the charts and a lot of what you've seen here on the monthly and put in your swing line, your moving average. But I also incorporate this time the MACD because I don't like slow stochastics on really long-term charts. I think the MACD on that type of chart does a better job, and I think slow stochastic beats it hand over when you're coming to the daily chart. So different variations. But then I give you what the Fed did, what I think, where we're headed, and the key points. If you've gotten my research before, it's in your mailbox. We already did the emailings. And by the way, it might be in your junk mail, so always take a look there. If not, it means you're not on my mailing list. Go to our website, sign up for my research. That's how you're going to get it. You can go at www.iraepstein.com. You'll see a carousel of free offers. Take advantage of it there. You can always call my staff. Here's the phone number. They're there. They'll pick up the number, or you can leave a message. We will call you back. You can click right up here if you're watching me on YouTube, and a number of different websites. Underneath us, it says click here for Ira's free offers. Do so. We'll take it the rest of the way. I'm Ira. You have a good day. Get that gold report. Take care.